Today we'll really be drilling down into some of the key terms, what the lease means, and really why we're putting on this webinar today. Now, to get us started, I wanted to mention three very important numbers. Those numbers are 85, 54, and 80. 85% of dentists have a lease agreement that can prevent themselves from ever selling the practice. 54% of dentists across North America are overpaying in rent for their practice. And 80% of landlords structure their lease agreements to give them the right to at least 50% of the proceeds of sale. Now, before we get into the details of today's webinar, I really wanted to go through who we are, what we do, how we assist the dental community, and why we're able to put on the course that we're doing today. So first and foremost, we are a healthcare and dental specialized tenant representation firm. And we were founded by dentists for dentists back in 1994. It's about 26 years ago now. Since then, we have negotiated over 12,000 dental office and medical leases. And really what makes us unique is that we do everything in-house here at Cirrus. We have an in-house legal team comprised of lease negotiators and attorneys, some who have been with us for over 18 years, as well as some of those that actually used to work for some of the major national landlords, essentially taking them from the dark side, if you will, to go from negotiating against dentists to negotiating for dentists. Beyond that, we also have our leasing team. And what they do is they go and take a deep dive into your unique market, look at real estate trends, market rates, so that through negotiations, we have pure concrete facts in what we're actually negotiating financials upon. Now, beyond that, we also have our consulting team, which I myself am part of, and we really focus on educating yourself and your colleagues on the dental office lease, as well as putting on continuing education courses around the country. Now, annually, we represent about 500 doctors per year across North America, and we deliver over 100 continuing education courses every year. Right? Before COVID, we were mostly in market. I was down in North and South Carolina, as well as Georgia, at least 2 to 3 times a year, putting on in-person seminars and meeting with you directly. Beyond that, we also lecture at most of the major dental conventions, such as the Greater New York, the Pacific Dental Conference, Yankee Dental Conference, the California Dental Association, as well as the Hinman. But we really work with dentists nationwide. Now, I wanted to show everyone here on today's webinar a bit of a snapshot from some of the major cities across the Carolinas and Georgia, really just showing the market trends, what we're seeing over the next few years and what we've seen in the past. Now, as we can see from here in Charlotte, we saw a steep drop in the end of 2020, followed by a gradual incline. So really what this is showing, and this is going to be a similar trend amongst most of the graphics I will show you right here, is that now is the perfect time to negotiate and really try and solidify those financials or reset those financials through the negotiations. So as we can see, the same trend here in Raleigh, Columbia, Charleston, as well as in Augusta. And so as we see, the trends remain very similar across the major cities. And now is a great time to try and reset those financials. So really, what's the purpose of today's webinar? First, we want to discuss the importance of the dental office lease agreement. Why is the dental office lease so much different than any other commercial real estate agreement? We also want to go through the key terms and conditions within the office lease and which will help you grow, protect, and eventually be able to sell your practice. And then we're going to go through the practical advice on negotiating the lease agreement. Some of the ideas and advice on how to actually affect the change we're going to discuss through today's course. Now, I know that some of you on today's webinar are also property owners or looking at having an owner-occupant type of situation. So I wanted to bring up some of the key points when and if you are considering purchasing the real estate for your practice. Now, this does require a larger upfront financial investment. This now means that you become the landlord and therefore have more responsibilities about what is happening in the space. If a pipe breaks, if something needs to be replaced or repaired, that does fall onto you. However, this also gives you the ability to earn a rental income and gives you greater flexibility on how to use the space and freedom to control it. Now, when looking at leasing, this obviously requires a smaller upfront investment and payment. You have greater working capital towards building out the practice. And a key term and key point within this is that you have greater flexibility to relocate or expand. Right? If you decide today, when you were driving into the practice, that you wanted to move the practice a mile down the road, when you're leasing, that is much more possible than if you were an owner occupant. Now, what ties these two together? It's the dental office lease. Regardless of if you are an owner occupant today or if you are leasing, the dental office lease is one of the key focuses and should be the key focus as it lays the foundation for your practice. Now, when I'm doing my in-person seminars, my favorite question to ask around the room is, what is a lease? And so my most common answers are a 20 to 50 page agreement with binding terms and conditions. Right? Now, that is true. But another question that I like to ask is, in your lifetime, what is the greatest investment and the largest investment you will make in your life? And many, if they're not dentists, will say a house, and that would be correct. However, as a dentist, the greatest investment you will make in your lifetime is into the practice and into the lease agreement. So when I ask what a lease is, the most common way I want you all on today's webinar to think about it is as this. As a check, right? This will be the greatest and largest check you will ever sign in your lifetime. Now, why is the office lease so important? Now, as we all know, your office location is the foundation of your practice. It is the most expensive business in commercial real estate to run and operate. And once you have committed to that location, you are there for usually an extended period of time. Now, as I just mentioned, the investment in the cost to build in this space is so great, and your trajectory and career path has great longevity in the location. We need to make sure that the lease agreement is structured properly so that not only are you protecting the foundation of your practice, you're protecting that investment as well. Now, additionally, as I'm sure all of you know on today's webinar, is that it is very difficult and very expensive, as well as time-consuming, to try and move the practice. Most of yourselves, and the trend across the United States today, is that you spend the 25 to 27 and a half years in the same location. That is where your practice is set. So once you're there, generally speaking, you are there for good. Now, for those of you on today's webinar that mentioned you're looking at potentially selling the practice and transitioning out, the lease agreement can preclude you from actually selling the practice. Right? It is very important, as I mentioned, to ensure that the lease agreement is properly structured so that you can, in fact, sell. Now, those are some of the adverse effects and can be very positive. But one aspect that is greatly overlooked is that the lease agreement actually gives you an incredible amount of leverage, right? Especially in today's climate where landlords are generally losing tenants and there's bankruptcies and defaults going left, right, and center. You as a dentist who needs your location and is on a long-term lease and are generally the most reliable tenants have an extreme amount of leverage moving forward. And it's all about retaining that throughout your career. Now, to build on the saleability of the practice, looking at it, what are the 3 key components for the sale of the practice? Well, first, of course, you have the equipment and your goodwill, right? So all the investment that you've made to the space, the build out, the trade fixtures, so on and so forth, as well as your patient base that you have accumulated over your lifetime in the space, are 2 of the major components. Now, the third is the lease agreement. Now, one way to think about the lease in this is as the glue that holds the 2 together, right? If you are to sell your practice for only equipment and your goodwill, what effect would that have if you were to sell it as a turnkey dental practice? So it's very important that the lease agreement is properly structured to ensure you retain top value when exiting and selling and transitioning out. Now, what should the dental office lease do for you? First and foremost, it should provide fair and affordable financial terms. Now, what I mean by this is both internal versus external fees. Meaning, what do I produce? What is my overhead? Versus what are the asking rates in the market? What is the landlord requesting of me to pay? And can I afford that? Additionally, we want to take a look at your taxes, maintenance, and insurance, or any of you on today's webinar that are on a triple net lease. Many of you are overpaying today, and it's all about inserting preventative measures to ensure that the landlord is not overcharging you or utilizing that section of the lease agreement as a profit center, which unfortunately many are and many do. Now, for those of you that had said that you actually had just recently built out your practice, and if you receive tenant improvement allowance from your landlord to assist with the build out, I want to make a very clear distinction today that you may not have been aware of, and that's that money that the landlord granted you is not free money. What has happened is that rate that they had provided was baked back into the rental rate, which causes a yearly amortization, compounding, and you actually end up paying more back to the landlord than what they initially gave you. Now, the lease should also provide you with long-term stability and security, which I've just mentioned. Right? For example, are you on a 10-year term with 2 5-year options, giving you 20 years of foreseeability? Are you on a 5-year term with only 1 5-year option? It's all about ensuring that the lease agreement gives you the most runway to meet your career goals and objectives. Now, many landlords also love long-term stability and security. This actually, in fact, gives you leverage. If you're approaching the landlord and saying, "Dear Mr. Landlord, I'd like to provide you with a 10-year term and 2 5-year options," especially recently, landlords are jumping through hoops to try and secure that tenancy, which actually gives you better leverage through the negotiations because they have recognizable revenue. Now, another aspect in why term is so important is that it actually makes it easier for you to sell the practice. Now, what I mean by that is any of the major financial institutions, whether you're speaking with Bank of America, Wells Fargo, etc., they need at least 10 years of term on the lease agreement in order to certify the loan for your buyer. So for any of you that are planning on selling the practice and you only have a finite amount of term left, it may be very difficult to sell the practice or greatly restrict your buyer pool. Now, the lease should also minimize risk and exposure. If any of you on today's webinar have signed the lease agreement personally or have signed a personal guarantee in association with the lease, the landlord has the ability to come after you personally, meaning the house, the car, the estate, everything. So we want to ensure that the lease agreement wraps a force field around your life as well as the practice. We want to ensure that there's a minimal amount of risk and exposure. The lease should also maximize your flexibility. If you're in a space today and the adjacent unit becomes available and you need more space for your practice, want to ensure that your lease has the rights and gives you the first right to expand. Or if you're in a building and you decide that now is my time to purchase, ensuring that the lease agreement has those clauses written in. Now, an aspect of the lease agreement that is usually overlooked, but I always advise to have in there, is something called a death and disability clause. And now what this ensures is that if anything is ever to happen to you, doctor, whether it's a physical injury, any form of mental incapacitation to the point where you're no longer able to practice dentistry, or if you are to pass away, it gives yourself or your estate the right to either A, terminate the lease, or B, sell the practice. Now this is important. We want to ensure that if anything is to happen, your family or yourself are protected. Now, touching on it once again is to enhance the ability to eventually sell your practice. Right? We want to turn the lease agreement into an asset rather than a liability. That pure concrete ground to set your success and your practice upon rather than a crumbling shell. Now, additionally, we need to also ensure that the clauses within the lease agreement do in fact allow you to sell, and I will be going through that just momentarily. Now, what is in your lease today? So what we have here is an option to renew clause. Right? Now, this language and the way this is structured is found in about 90% of lease agreements. So I'll give everybody a few, about 25, 30 seconds here to give a quick read through, and then I will go through it as well. Right. So first is provided that Dr. Joe Black shall remain as the tenant. Now what this means is that the options to renew on the lease are personal to Dr. Black, meaning that in the event that he assigns the lease and sells the practice, his buyer will not have the options to renew the lease agreement. Now that poses a big problem for what we just discussed with the term on the lease agreement for any potential buyer. Next is that if the tenant duly and has regularly paid its rent and has performed its covenants and obligations under this lease and has not been in default. Now, some of you on today's webinar, I know, had some issues when there was the brief shutdown and recouping some of the costs and not being able to pay your rent. It is very possible that if you received a notice from your landlord regarding late rent, you may have options to renew that are null and void. Now, this one is unique as well because it states that any such renewal shall be on the landlord's then current standard form lease, meaning that if you had a different lease when you had first signed for your initial 10 years, the landlord at the time of your renewal gets to provide you with a completely new lease agreement, meaning that anything that had been negotiated prior is now gone. Now, it states here that it shall be renewed at a minimum rent to be determined by the landlord and tenant, but in no event shall it be less than the rent paid in the last year of the original term. So now, essentially what this means, and one way to think about it, is almost as if you're on the world's most boring roller coaster, only going up and never coming back down. Right? So if the market tends to fluctuate, as we're seeing now with a drop, any of you who have your option to renew coming up in the next year or so could be faced with a rent increase when the market is actually trending downward. Now, it also states that the rent shall be determined by arbitration based on market rent for renewing tenants in the building. Now, this happens to skew the rental rates, because if you have another business in the building that paid a higher build-out cost, if they paid a higher tenant improvement, there's a number of contributing factors which should not, in fact, impact your rental rates. So as we can see through this clause alone, there's a number of red flags and issues that could not only impact your ability to sell, but could actually cost you money in terms of rent. Next is the assignment section. Now, the assignment section really dictates how you can sell the practice, to whom you can sell the practice to, and what the landlord's involvement in that process looks like. So once again, I'll give everyone a couple moments here to read through this, and then I'll go through it as well. Now, it states that if the tenant should wish to assign or sublet the leased premises, it shall have first received the consent of the landlord. So meaning, doctor, if you want to sell your practice, you must first have the landlord's consent to do so. Now, this is normal, as I'm sure if you were the landlord, you would want some say in who can come in, who can leave, and what obligations are attached. However, it states that the landlord shall have the option when you request to approve, decline, or in fact terminate your lease agreement upon the effective date of such proposed lease assignment or sublet. So just for asking the landlord to sell your practice and assign the lease, the landlord has the right to terminate your lease agreement. Now, as we discussed earlier when looking at the sellable aspects of the practice, this could greatly impact the revenues that you would receive at time of sale. Now, it also states here that the landlord shall have the right to revise the minimum rent to be paid during the remainder of the term to the greater of the current market rent for the leased premises or 15% greater than the current rent. So you've asked the landlord, they've approved, they will allow you to sign and sell the practice, but they're going to increase your rent by 15%. Now, doctors, what type of impact is that going to have on your ability to sell the practice? Unfortunately, far too often have I seen deals and sales fall through in the 11th hour because the landlord has now hiked the rent on the prospective buyer. Right? Many get scared and walk away from the scenario because that's not what the valuation was predicated on. It wasn't predicated on a 15% increase in rent. Now, furthermore, should tenant receive from the assignee or subtenant any rental income, cash, goods, or any form of consideration in connection with the assignment of this lease or sublet of the premises that is over and above the current base rental rates payable to landlord in any fiscal year during the term of the lease, the difference between the annual rental rate and such rental income, cash, goods, or other consideration shall be paid to landlord directly within 30 days of tenant's receipt thereof. Now, to cut through the legal jargon of that, essentially what that's stating is you have now received the landlord's consent, you have sold the practice, and now you have received the revenues from doing so. The landlord now has the right to request those sale proceeds. Meaning, if you sell the practice, all of those proceeds of sale are now the landlord's. Now, want to make very clear that 100% should not be the case. The landlord should not have any right to your hard-earned investment and your sale proceeds within the lease agreement. However, unfortunately, this does happen every day. Now, beyond that, it states that notwithstanding the landlord's consent to any assignment or subletting, the tenant shall not be released from its obligations under the lease and shall remain liable for any failure of tenant or its assignees or subtenants to observe each and every covenant of the lease. So now the landlord has not only taken all of your sale proceeds, but they have also now kept you continually liable on the lease agreement. And that, say you've sold the practice, you've retired, you've moved down to Florida, you're sitting on the beach 3 years after you sold the practice, and you get a call from the landlord stating, "Hi, doctor, I hate to be the bearer of bad news, but unfortunately, your buyer has gone in default of the lease agreement for the past 4 months and is now declared bankruptcy. So we need you to come back up here, pay the remainder of the term as well as the defaulted upon rent until you find a new buyer." Now, I'm not hypothesizing here. That was a real scenario that happened about 1.5 years ago to a doctor from Charlotte. And it ended up costing him over $85,000 out of pocket to pay the lease back just for the continuing liability within this assignment clause. So as you can see here, from looking at the highlights, within this one provision, not only have you been restricted on your ability to sell or had the lease pulled out from under you completely, the landlord has also taken your proceeds of sale and you have been held on the hook for the lease agreement after you've sold and have retired. Now, those were just some of the clauses in the lease agreement that I wanted to go into detail with you. As you can see here, there are a number of others, such as a demolition clause. What this does is, in the event that the landlord has ulterior motives for the practice, And for the building, what happens if they've decided that they're going to redevelop it, put up a new community, put up a new mall? The landlord has the right to do so through a demolition clause. And unfortunately, you're out on your ear, usually within 60 days notice. Now, I ask you, doctors, are you able to relocate your practice within 60 days? Absolutely not. On average, it's about 18 to 24 months to relocate your practice. Now, beyond that, there's also the relocation clause, where the landlord has the right, through the lease, to relocate you anywhere else within the building. And what happens if you're in a beautiful corner unit and all of a sudden you get a notice from the landlord that within 60 days you are going to be relocated to the basement of the plaza? What impact is that going to have on your business, on your visibility? And what happens if the space is smaller or larger? Either there's going to be a difference in rent and it's going to be greater for you, or you're going to have a space where you can't see the same number of patients. And it's very important to know all of these factors, because not only do these affect the day-to-day operations of your practice, but they can also affect the ability to sell. Now, to move into some of the practical knowledge and how to negotiate the lease agreement, I want to look at here what we call the tenant lease cycle. Right now, we as a firm and believe that and have seen results from beginning the process at least 30 to 24 months prior to the expiration of the lease agreement yields the highest benefits. Right? Now, the reason that we advise that is simple, right? And it's purely from a leverage standpoint. As I just mentioned, it takes a great deal of time and money to relocate the practice, right? Like, as I mentioned, 18 to 24 months. And don't be fooled. The landlord knows this as well. That's why your option to renew deadline is usually within 3 to 6 months prior to the expiration of your lease. And that's because the landlord knows that at that point in time, it is going to be very difficult for you to pick up and move the practice or relocate. Now, by beginning early, we get to hold that card close to our chest, essentially stating that, without saying, and it's not always a card we want to use, but we have the ability to relocate if necessary. And landlords understand that, as I mentioned. Little alarm bells start going off in their head going, why is Dr. Smith looking to renew their lease so early? And they are more amenable to making a lot of these changes that we've mentioned today, not only from the legal provisions through the lease agreement, but also a lot of the financial changes as well. Now, as we're seeing today, there really is an unprecedented opportunity, especially with these landlords being affected the way that they are, with the ongoing loss of tenants, some of the bankruptcies that are popping up. So for those of you that are on today's webinar looking to renew your lease, the long-term lease renewals have been some of the most effective renewals and negotiations we've done in our 26-year history. As I mentioned, bringing forth that 10-year term with 2 5-year options, or making that long-term commitment to the landlord, has been incredibly successful. Additionally, with those long-term renewals, we have seen unprecedented abilities to reset the financials on the lease, bringing it back down to market, following the market trends downward before it begins to spike again. Now, for those that are looking to start up or build out your first practice, maybe add a location or relocate the practice, the financing provided by Bank of America is some of the lowest that we've ever seen in our lifetime, as well as many of the equipment and supply companies are really going above and beyond in terms of helping to make deals and understanding that this is a difficult time, and they will help and give you deals on that equipment and those supplies that you need. Beyond that, as I've mentioned a couple times now, landlords are desperate to fill the vacancies that they've seen pop up over the past year, and being that new long-term tenant for them is truly granting incredible deals. Now, we've gone through a lot of the technical components and why we're starting the lease agreement early, why we're looking at that 30 to 24-month window. But now I want to walk you through our process, how we've seen such great success through our 12,000 lease negotiations in our past 26 years of history. And it really boils down to these 8 steps. Now, first and foremost, we gather all the information. So all the lease documents, any relevant information from the landlords, any letters, email correspondence, really giving us a clear understanding of everything. Right now, next, we want to identify your practice and career goals. How much longer do you want to continue practicing? What do you want the practice to look like? What do you want? Do you want to bring in associates? Do you want to bring in specialists? How do you want this practice to be structured? Now, after we've determined step 1 and 2, now we go into reading the lease agreement. From here, we review the lease cover to cover. That way we know exactly what is within the lease agreement. There's no hidden surprises. We have a clear understanding of everything that's expected of us, expected of the landlord, and what our obligations and our liabilities are through the lease. In step number 4, we prepare with market research. So taking a truly deep dive into the market, knowing what's available, taking a look at market rental rates specific to your tier, the type of building, is it retail, is it office, is it medical, things of that nature. But ensuring that we have a clear understanding on market trends, and that way we know exactly what we're negotiating upon and negotiating with facts rather than with hunches and guesses. We want to prepare that market research. Now, next, with step number 5, we want to develop an outcome and strategy here. What do you want to achieve through the negotiations? What are your high, medium, and low priority items through the negotiation? Now, those high priority items being, I must have this in order to deem a successful negotiation. Some of those medium items that you're willing to maybe give and take with, and those low priority items. What are you willing to concede upon in order to get the high and medium priorities? Now, we've gone through the first 5 steps of our negotiation, or of our process rather, and we still have not done one thing, and that is reach out to the landlord. So through step 1 through 5, we've gathered all of our information, created a clear strategy before even reaching out to the landlord. Now, once we do, we want to start with the economics of the negotiation, ensuring that we're getting you the very best deal possible before moving into the actual business and legal terms, right? But we want to nail down the best financials possible first. Then, as mentioned, we move into the legal and business terms of the lease agreement, those assignment clauses, the options to renew, the relocations, the demolitions, and so on and so forth. Now, once we've completed the negotiation, we've gotten all of our high priority items, our medium priority items. Now we want to do a final review of the lease. And now I can't stress this enough. Unfortunately, Far too many times have we seen landlords try to slip in clauses after we've gone through the entire negotiation. They try to slip in clauses that they had given up on before, and they go, oh, well, oops, I didn't mean to put that in there. But we want to go through a thorough final review. We actually have technology here which will track each and every change, keystroke, so forth, to ensure that nothing has been changed. Now, once that process is completed, it gets sent to you for your execution of the lease, and you begin on your new term with your new lease agreement. Now, with that being said, through those 8 steps, I just wanted to provide those of you on today's course with some of our latest Google reviews that we've received. So we can see here that the amount of savings that we produced in free rent, tenant improvement allowance, and actually negotiated rent during the term more than made up for the fees. And we also removed those potentially business destroying clauses in the lease agreement. Additionally, here we have Dr. Omera Nas, who is unfortunately 74 years of age looking to sell her practice. And on 3 separate occasions, the landlord had told her no, she couldn't sell. So what we did was we actually relocated the doctor to another location, and we had the landlord cover 100% of the build out. And then we additionally obviously negotiated the business and financials on the lease agreement. Now, I also wanted to provide a case study here for what we were able to secure for Dr. Nora in Charlotte. And we were actually able to provide her with for $630,000 in savings and a 6,200% return on investment. Right? Now, as you can see here, we were able to remove that personal guarantee, right? That personal exposure and personal liability that I mentioned earlier on in this evening's webinar. We're able to remove the landlord's right to collect proceeds of sale, and we're able to get her continuing liability removed at time of sale. We also were able to secure her with a death and disability clause. As I mentioned, if anything is to happen to you, we ensured that her family and her estate were protected as well as herself. Now, in addition to our webinars and our lease negotiations that we perform, we also provide a service called a critical dates and risk analysis. Now, this is normally a $1,995 value, $1,995. We spend 3 to 4 hours analyzing your lease agreement for traps and exposures. And then we get on a scheduled call with you to cover you and your vision plan, the traps that we have uncovered in the lease agreement and what they mean to you. What type of exposure is that? What effects will that have on the business? And what the ideal lease agreement should look like for you. And then, of course, we also discuss how to effectively negotiate and create a tactical plan with you for that. Now, for all of those that are on to this evening's webinar, that I will be waiving the fee of that $1,995 and put it as a complimentary basis. So for any of you that have joined this evening, if you are interested, we will just open up the polls here momentarily. Please fill it out. And if you have any questions in the meantime, please see my number on the screen as well as my email address. I'm more than happy to help, and look forward to speaking with each of you. I will also open up the floor to any questions if you want to type those into the chat. Happy to address any questions at this point in time as well. All right, so I have a question here. It states that my lease is coming up for expiry in 3.5 months. Is it too late to start the negotiations? Absolutely not. No, as I mentioned with our plan there, yes, of course, the 24-month is always the best, but no, by no means is the 3.5 month period going to greatly diminish your ability to negotiate. You do still have leverage. As I mentioned throughout this evening's webinar, you do hold an extreme amount of leverage when negotiating because of the increased vacancies, because of the trends that we're seeing in the market. Absolutely would still recommend to negotiate the lease agreement. Please send me your lease. I'm happy to review and we can discuss a strategy upon that. I have another question here from Dr. Smith that states that looking to sell my practice, but I only have 5 years left on the lease and no remaining options to renew. What do I do? So, doctor, once again, I would advise that you send me the lease agreement. We'll take a look at that. But you want to ensure that you set up the lease agreement with that suitable term that I had mentioned. We want to ensure that you have at least 10 years worth of term on your lease. I'm not sure how much longer you're continuing to practice, but you want to ensure that you have that runway, both your remaining amount of time practicing, as well as the remaining options as well, to ensure a smooth transition. Right, well, thank you everyone for attending this evening's webinar. I'll leave the greatly appreciated. And like I said, any questions, concerns in the meantime, if you're interested in that complimentary lease consultation, please feel free to reach out to me. I look forward to speaking with each and every one of you. Once again, thank you for joining. I look forward to speaking with you all very soon.